Ireland is a country that once became an international tax haven, famously known for helping Apple, Google, and formerly Facebook to avoid $28 billion in taxes combined. This tax scheme is also the main reason why Ireland has the highest GDP per capita number in the world, although anyone living there will tell you that this GDP number is just an illusion, simply because those trillions of dollars are only sitting in the bank account rather than used for building infrastructure, research and development, or upgrading public services like healthcare and education. You know, things that are necessary to build a prosperous economy. But how did Ireland tax loophole actually function? How did it manage to attract some of the biggest companies in the world? And how did all of these have people actually believing that Ireland is the richest country in the world? This is how Ireland's tax loophole actually worked. Okay, so there are a few things that you need to know about here. The first is just how important being a tax haven is to Ireland. You see, US-controlled corporations make up 25 of Ireland's top 50 companies. They pay over 80% of all Irish corporate taxes, while employing 10% of Ireland's workforce. Between 2017 and 2021, a third of all corporate tax in Ireland came from just 3 companies, which were speculated to be Apple, Microsoft, and Pfizer, although the Irish Fiscal Advisory Council never revealed them in their report. The second thing is about the question of whether Ireland is still a tax haven or not. Because for the past 10 years, the EU has relentlessly tried to shut down Ireland's tax haven operations, and they have been quite successful at this. For example, it forced Ireland to completely close down the double Irish tax loophole in 2020. This led some people to believe that Ireland is not a tax haven anymore. Although, I personally would argue that Ireland still is a tax haven, but more importantly, it cannot afford to lose its appeal as a tax haven. Let's say that tomorrow, the USA passed a law that made it difficult or unattractive for companies like Apple and Google to store their profits offshore. Well then, in the worst case scenario, Ireland could lose 80% of their corporate tax income and see 10% of their population immediately out of work. So with that in mind, let's explore Ireland's corporate tax haven strategy in detail. Let's imagine that you are the CEO of Apple replacing Tim Cook. Like all CEOs, your job is to maximize shareholder returns, and the reality is, reducing taxes paid to the government is the simplest way to increase your net profit. It's completely legal, everybody does it, and if you're not willing to engage in these behaviors because of ethics or any other reason, you will simply be replaced by someone else who does. Now, you will have your company here, selling iPhones, MacBooks, and making lots and lots of money. But there is a major problem. If you just put everything into one company right here, if you get sued or go bankrupt, you lose everything. A company as big as Apple deals with lots of lawsuits, even with the FBI, so this is a real threat. So, instead of owning this company directly, you put another company up here to hold all the shares of that company. We'll call the top one a holding company and the bottom one an operating company. This structure adds a layer of protection, because if the operating business gets sued or goes bankrupt, it doesn't matter, as it technically doesn't own assets like the factories, the offices, or the patents. In the worst case scenario, you just declare bankruptcy on the operating company and set up a new one within a week without losing any of your assets. The holding company, meanwhile, has a pretty low chance of getting sued, because it doesn't do anything except for holding assets. It doesn't sell products or services, it doesn't employ people, and it doesn't pay wages to workers. Basically, it doesn't do anything that can position itself to be sued. This is one reason why the corporate structure of most big companies look like this, or this, or this. I pulled these images from a financial crime report, so they look more complicated than most, but the point still stands. Just think of these individual companies as building blocks that you can stack on top of each other in any combination possible as long as it doesn't break the law. And There is no need for all these companies to be registered in the same country. Keep that in mind because it's very important. Now that we understand the concept of a holding and operating company, let's take a look at Apple's simplified corporate structure. On the very top, we have Apple Inc., the main company that is incorporated in the USA and is listed on Nasdaq. When people think of Apple as a company, they mostly refer to Apple Inc. right here. Below this, we have Apple Corporations International. FYI, the address of this company is at Holy Hill Industrial Estate, Cork, Ireland. This company is a holding company that is 100% owned by Apple Inc. and is used to receive dividends from most of Apple's subsidiaries. It has no physical presence and has never had any employees. The fact that this company is incorporated in Ireland is not a coincidence. Then below this, you have Apple Distributions International, an actual operating company located in the city of Cork, Ireland. Unlike the holding company above it, which has no office and employees, this company is home to more than 6,000 Irish employees and conducts day-to-day business. It also serves as Apple's European headquarters. So here, imagine that Apple sold its products and make money. The money goes through this operations company that conducts day-to-day business. Then it sends the money to the holding company, which is incorporated in Ireland but is not tax resident on Ireland, because it doesn't have a physical presence there according to Irish law. Instead, this holding company is allowed to be tax resident on another tax haven like Bermuda, Cayman Island, or the Bahamas, where the money is simply tax-free. This here is the loophole. Of course, in real life, it's more complicated with lots of different companies involved, but this is the basic structure. It's called the Double Irish Scheme, and Apple used this very mechanism to avoid billions of US dollars in taxes over the last decade or so. Now Ireland, under lots of pressure from the EU, closed the Double Irish arrangement for new entrants in 2015 and abolished the loophole fully in 2020. But the structure still stands. I said at the beginning that Ireland cannot afford to lose its appeal as a tax haven, because it is still a huge source of jobs and income for them. So immediately in 2016, Ireland introduced its Knowledge Development Box program that reduces taxes by 50% on intellectual property assets like computer programs or patents. This meant that for companies that are registered in Ireland and had their intellectual property stored there, their tax was reduced from the regular 12.5%, which is already pretty low by itself, to a meager 6.25%. This is Ireland's way of keeping corporate taxes as low as possible, as they desperately want to be the main destination for companies looking to reduce taxes, while also complying with international tax regulations. Now, let's look back at that Apple example. With this change in regulation, instead of using the Caribbean islands to store the cash, Apple now brought it directly onshore to Ireland instead. So, US businesses began moving trillions of dollars in intellectual property to Ireland. And because the tax exemption only applies to companies with intellectual property such as computer codes or patents, it makes sense that most companies who use Ireland as a tax haven are mostly tech companies like Apple, Google, and Microsoft, or pharma companies like Pfizer and AstraZeneca, the latter of which is now building a brand new $400 million API facility in Dublin. Because, quote from the CEO himself, the UK tax rate was discouraging. Now, when these trillions of dollars of intellectual property were transferred, Ireland's GDP increased by 34.4% that same year. You see, GDP is measured by summing up four drivers of economic growth: consumer spending, investment, government spending, and the difference between exports and imports. So, basically, more exports equals more GDP. And those trillions of dollars in intellectual property are classified as exports. So, it counts towards GDP because the GDP formula doesn't distinguish between different types of exports. This is why in 2018, the IMF calculated that a quarter of Ireland's growth was actually down to iPhone sales. But it's quite clear that Apple will be the one who enjoys the profits, not the people of Ireland. That's why Ireland is not the richest country in the world, even if the GDP data says so. It's not to say that the GDP figure is useless and should be abandoned, but no statistics is perfect in isolation. And the best way to measure something like a country's economic activity is to combine it with other relevant data to get multiple perspective. Now, I want to talk about Ireland's Sovereign Wealth Fund. If you didn't know yet, Ireland is planning to unveil a brand new Sovereign Wealth Fund that it says will be worth 100 billion euros by 2035. Usually, when we think of a sovereign wealth fund, we associate it with oil-rich countries like Saudi Arabia, Kuwait, or Norway. But there are several reasons why a sovereign wealth fund makes perfect sense for Ireland. That is because Ireland's corporation tax income has ballooned from just 4 billion euros in 2014 to 22 billion euros in 2022. This newfound income allows Ireland to run a substantial budget surplus. But I think the primary reason Ireland set up this sovereign wealth fund is that they know this tax income is not sustainable. The Irish government, after all, is very reliant on taxes on American businesses to fund spending on healthcare, education, and other essential services. This is not sustainable, because a slight change in tax regulations or bankruptcy in either Apple, Microsoft, or Pfizer could see most of this income evaporate. In the same way as oil-rich countries worry about their oil reserves as it is a finite resource, Ireland's foreign tax income is also the same. Now, if you want to break down on how sovereign wealth funds really work, then watch this video where I break down how Norway managed the best sovereign wealth funds you've ever seen. This is Doverhill, and see you next time.